So given the fact that we are seeing, excuse me, that we are seeing financials take it on the chin more broadly today, one of the worst performing sectors in the S&P, and some weakness in some of these names that had exposure, but maybe de minimis in terms of the impact, Goldman Sachs, Morgan Stanley, that Wilf was just talking about. Do you see buying opportunities here?
Oh, gosh, absolutely. There's a buying opportunity. I'd probably leave Nomura and CS out of saying that. But for the rest of the group, boy, you've got some tremendous valuations. There's a real value play still here in a lot of these stocks, and a lot of the, JP Morgan, Bank of America, Goldman, all of them. And I think you all are right that some of these companies have really good risk management teams, and they did their job. And that's what it's proved by them saying this is going to be fairly de minimis to us. And so as a result, I think this little blip is a buying opportunity, but also keep in mind that this also kind of backs up the Fed's policy of saying that maybe by the end of June, that a lot of these these companies are going to be able to start their stock buybacks again and reinstate dividends. So that's just another reason why to take advantage of this. I mean, when you can buy some of these below book value, that's a tremendous opportunity, which we haven't seen in a couple of years.
Yeah, interesting that JP Morgan's note today on this questioned whether Credit Suisse's buyback announcement of late last year will now be under threat, given the scale of exposure they have, though that doesn't apply to some of the U.S. names. Cassandra, how worried are you more broadly? And clearly the banks would be particularly exposed to this, though all equities might be something to watch, that there's just a huge amount of leverage to the upside that perhaps we're not all pricing in, and we're not saying that we're going to see everything collapse and half like Discovery and CBS have. But it's kind of odd to see that happen to those types of traditional value names that we know well. We're not talking about SPACs here. We're not talking about Teslas. We're not talking about recent IPOs.
Absolutely. But, in looking at the list of media companies specifically named in the news regarding what they really have taken a hit in, I'm not sure I would couch them simply as value plays. I think they may have been playing more the momentum. I mean, if you look at CBS in the last, Viacom CBS in the last couple of weeks, I mean, it's been strongly to the upside until, last week sometime. And so I just wonder if, momentum playing was really what was going on here. I'm not sure if that's the right approach for a family office, but it's none of my business. But certainly the names that were mentioned, I think, are so far really, I think, in a sector specific. And so, I look at my screen and I'm not seeing what I would consider the buy and hold value names right now doing very badly. Procter and Gamble, Campbell Soup, things like that. Those are the kind of true value names that aren't getting hit. So that tells me more about the composition of the portfolio.
Shepard Smith here. Thanks for watching CNBC on YouTube.